Welcome back. You're watching Startup Street. Now, it's been a busy season on Dalal Street with a spate of IPOs, consumer and tech companies lining up to come to the market. And the latest one to join that queue is Shiprocket, with the SEBI recently approving the 2,300 crore rupee plus IPO. So today, we put its founder, MD and CEO Sahil Goyal on the hot seat. Sahil, welcome to Startup Street and thanks so much for your time here. Let's start with that IPO question itself. Why now? What made this the right time for Shiprocket to come to the market?
See, I think Shiprocket is building a platform which is built like Rails for e-commerce. And we have been at it for over 13 years, right? We've tried various parts of this and continuously have been building the invisible layer on which, marketing, payments and shipping runs. We believe that this is a business that compounds with India. Yeah. Because if you think about the coming e-commerce market, which is going to be tenfold in the next 10 to 15 years, we believe that newer forms of commerce will take place. So we think that, commerce will become more hyper-local or quick. It will become more personalized, right? More many-to-many vernacular. It will become agentic now with AI. Yeah. So with this kind of fast-changing world of commerce and India's transformation, I think it's very difficult for one to put a monolithical idea to say, okay, this is how the future of commerce will work. Instead, we are trying to build our business like a box of Lego blocks, where we're saying, look, I'm going to build all the blocks to do marketing, to do payments, to do capital, lending, to do returns, to do all of these things. And then people can build on top of us, right? So no matter what kind of commerce comes to India in the next decade, we'll be there to power, right, the back end of the thing and to become the backbone, essentially. So for this kind of model, right, our build is a long-term build. And we believe that, this is something which needs to be kind of institutionalized and immortalized and put into the mix as a disciplined 100-year, vision company. And for that, I think for the last 2-3 years, we started to think about the IPO. And we felt that the best way to align shareholders, customers, everyone with the same goal is to take the company public, right?
So can you give us a sense of what kind of timelines you're looking for, for your IPO?
I think we're pretty close. So you should see us in the next year.
Well, next year is 12 months long. Any more specific timelines as to when we'll see Shiprocket get listed?
Early next year.
Sahil, while I understand you cannot comment on the valuation yet, would you weigh in on the debate, especially with the recent listings? You were last valued at about $1.2 billion in your, private fundraise. What is your expectation on that front as you do go public?
See, I think our expectation is not on a certain valuation number, to be very honest, because this is not an exit event. This is not a liquidity event. This is a new start in a way where, there have been supporters, shareholders who've been with us for a decade. And they're going to be supporters, shareholders for the next decade. The company is growing up. It's a teenager now, and going into this next phase, right? It's really the beauty is in the eye of the beholder. That's the only thing I can tell you, because valuation isn't something I think that we are not aspiring for that. We are aspiring for impact. We today are about 200,000 merchants strong. We want to be 1 million merchants strong, right? Create 1 million profitable businesses by in the next 5 years maybe. And then in 10 to 15 years, we want to power 10 million businesses in India out of the 60, 70 million that are there. To do that, whatever it takes to kind of, whether it's about going public, whether it's bringing the right partners, whether it's raising more capital, whether it's doing M&A, whatever it will take to get to that journey is what we'll do, right? So to me, it's just a means to an end. Like it's a way to actually get to the next step. I don't think it is the goal, right, at all.
Well, let's talk financial, Sahil, because Shiprocket has been able to narrow its losses to about 74 crores for FY25. Is that trend sort of sustainable as you go public? And how soon, before the company is able to report a full year profitability?
See, I think Shiprocket understands the meaning of profitability, right? We turned profitable as a company in 2019, 2020. And, our core shipping business has been profitable since then. We're delivering double-digit crore EBITDA, right, in that business today. And what we did as a, box of Lego blocks is we built one, took like 7-8 years to build it, scaled it, became pretty, meaningful in the market, and then started building the other blocks. And then we didn't build one, we started building 3 together, 5 together, 6 together. And now we have this playbook to say, look, this one business generates a ton of cash, right? We invested back into generating future growth engines, right, which can grow at 2 times, 3 times the speed of the main bigger business. And if we can keep doing this, we have an unlimited, growth life, we have an unlimited profitability, we have an unlimited kind of runway as a company, right? Because this model allows us to be prudent about where we put our dollars, right? Allows us to actually act like capital allocators, right? which I think comes later in a company's journey. I think we've been lucky to be able to have, found very strong PMF in one product, which is now scaling and growing and generating cash, and have the liberty and the luxury maybe to be able to invest behind newer products. So I think the answer, whether we expect to see full year EBITDA or not, I think it's already there in the way it's designed, right? It is really up to us in some ways and our shareholders, right, to figure out that, okay, where do we trade off cash for growth? When does it make sense, and in which things does it make sense, right? So would you do a gross margin negative business and put cash into it? Of course not. I don't think it makes sense. But if you could do something where you could invest ahead of time in building capability, building the infrastructure, building the digital rails and so on, that can compound over time, because we've seen it with one business. So I think it's a long term, is the company going to make money? Of course, right? It's obvious.
But how do you weigh in on that debate of growth versus profitability? What can you guide your investors as the company goes public?
So I think if investors are looking only for profitability so I think they're looking for growth, right? Ultimately. And
so
they're looking for growth which is sustainable, right? And I'm saying we'll do whatever delivers the best result there. If you ask me that, will you optimize for EBITDA or optimize for growth? Again, I think the answer is there, right? At a sustainable level, always optimize for growth, because that's what, that's what the whole world's about at this point, right? And if it's unsustainable, then definitely do not find the right business model and then go behind it, right? So I cannot give guidance in saying, oh, you know what, we're going to now start delivering profits. Honestly, that means we are not able to then invest in growth. And there will be a point when that happens, and it will be organic. Like, I don't think I can time it. I don't want to time it, right? It's something where we're saying, look, we're continuously investing behind, solving this huge problem that affects millions and millions of people, right? We've done one part of it. There are 10 parts left. We've got 10, 15 years of execution. Where do we use our cash and how? That is the question, right?
Sure.
And I think it'll emerge, right? As we go through these motions, it'll emerge where do we put what. And does it mean that, we deliver stellar EBITDAs in the first 2 years? Or does it mean that we deliver stellar growth in the first 2 years? And then how does that change every 2 year set, right?
Okay, all right.
Hard to be able to, put it out there as a fixed answer, because then I'm being unfair to the market and to even shareholders, to be honest.
Well, let's talk about the revenue mix as well for Shiprocket. I mean, 80% of your revenue still come from your core businesses and about 20% from your emerging businesses, which is a mix of, payments, lending, cross-border and whatnot. How will this mix evolve once the company goes public over the next few years? And what do you believe will be the faster growing verticals?
See, I think our mix will continue evolving in the favor of emerging becoming bigger, right? The reason for that, I mean, again, can't give you a percentage as such, but it's 20 to 25% today, and it's inching up, right? The reason for that is that, the way I describe the business, the growth engines itself are obviously growing faster. That's why they're taking in investments in building today. And we think that, there will be breakouts. Like, if, for example, there are three main parts of our growth engines, or the emerging business as we call it. There is the omni-channel logistics bit, which includes, so think about brands who become bigger with the core shipping business. They start needing, let's say, 2-day delivery, Prime-like experiences. They now need dark store, they need hyperlocal, they need all of these kind of non-traditional e-commerce, let me call it. So that business got built 3 years ago, 4 years ago, starting with a warehousing network, and it's become meaningful number now and growing, like I said, very rapidly. Thanks to the tailwinds from quick commerce, thanks to all kinds of new innovations happening in commerce. The second one is our marketing stack, which includes our fraud engine, trust engine, checkout in payments. It includes our multi-channel marketing automation stack. So there's a bunch of features inside it that again is an essential part of any merchant's journey. And what we realize is that all the merchants who actually ship with us, they are running these other parts of their business somehow as well. So it's not even like we have to go and acquire them. A lot of these customers are running marketing in thousands of crores. They are spending money in trying to do logistics outside of commerce, outside of courier. And that's where we are trying to actually go and attach and to say, look, we can do this for you. We've done one part. And when it all comes together, it actually works better, right? It affects both the shipping as well as the newer parts. So marketing is an essential part there. And then cross-border is something we've been, very excited about. I think lately there have been some macro changes in the world where there have been some, some level of uncertainty, let me say. But at the same time, that business, I think, is just well poised in terms of the rails that are getting built, the unique networks that are getting built, the partnerships that are getting built. And I think in the long run, as India starts developing into a manufacturing hub, into an export hub, we will definitely be beneficiaries of that in the long run.
So what would you say would be the growth engines for the company, so to speak, going ahead?
See, I think we power a certain percentage of India today. So let's say if India is 70 billion, 80 billion in e-commerce, let's say 70 billion, we are about 4-5% of India, right? I think the vision is to be able to power 10% of the future of India, and the future of India looks very big. So if you look up the numbers, there's anything from 700 billion to $1 trillion in the next 10 to 15 years, right? Just from news. As being able to power 10% of that is a very meaningful number for the company in like 15 years, 10 years. So I think that is the ultimate vision, and we see commerce developing very differently. Like I'll give an example. We've got merchants who are not using a storefront at all. They might be using a YouTube ad or a YouTube video, like an influencer video. They put a phone number there, people DM them, and then they process their orders on cash on delivery. So this is happening in tier 3, and it's not small, and it's happening more and more, right? So the thing is that we can't imagine like after 5 years and after 10 years, what does e-commerce look like? Well, I don't know, right? All I'm saying is we can't imagine, I can't imagine, and we also can't imagine what a high GDP per capita makes the country look like. And I think it is this lack of imagination or the inability, let's say for us as humans to be able to sort of imagine this well, which stops us from imagining the future well, right? But the reality is, if you put facts together and you think about it, if the market's going to 10x, right? Is it just going to be this? Like if the landscape looks like something today, where you've got marketplaces, you've got a couple of other ways of doing commerce. This was done in a low trust India, right? Which we are still evolving from. But I'm saying 10 years out, are we going to be low trust? Are merchants going to be non-digitized? Are consumers going to still kind of, so I think if you think about that and you think about who's going to be buying in 10 years, who's going to be selling in 10 years, and then what do they need? I think the picture starts to emerge, right? In terms of, what are the opportunities available. So I think it's a huge market, and, we will be very, very present, right? Maybe invisible many times because we're kind of the backbone, but we will definitely be present in many, many aspects of this market, and will be a large spread.
All right, Sahil, we'll leave it at that, and we wish you the best with your upcoming IPO. Thanks very much for your time here today.
Thank you so much. Thank you for your wishes. Thank you.
Okay, on that note, we're going to wrap up this edition of Startup Street. Many thanks for tuning in. It's a goodbye from all of us.